Hi there, this is Rob, and this is the 2-minute overnight overview for Tuesday. Monday was an interesting decision as we approached the close. For most of the 4 o'clock to 4:15 time span, both SPY and ES were meeting the minimum criteria for a possible short trade. But the Edge Finder was showing mixed studies. A bullish Edge Finder study looked at 2-day or less moves from 10-day lows to 5-day highs. Detailed information on this study can be found in the October 16th overnight overview. I ran the study a few different ways, checking to see if longer-term lows were just as impactful. It appeared they were, and that strong momentum over the last 2 days provided a good chance of some overnight follow-through. So I decided against a possible short. Shortly before we reached the 4:15 closing time, ES saw its numbers change so that it no longer met the minimum criteria of 45% or less percent profitable and a profit factor of 0.91 or less. This made the decision to sit out even easier. Let's take a look and see how the night played out. After settling at 1382.50, ES never wandered very far from that during the overnight. After oscillating around that line, it eventually opened exactly flat. Since SPY closed at 4 p.m., it did gap down 22 cents. Thanksgiving week has shown some consistent seasonality over the years. Wednesday has typically been a strong day for the market, and if we just look at the night, Tuesday night has been interesting. Monday's action saw SPY straddling its 200-day moving average. This is notable because the Tuesday night before Thanksgiving has acted much different when SPY was above the 200 MA than when SPY was below it. Let's look at a couple different results, and I'll show why I say this. This study shows overnight performance of SPY since 1994 when it has closed above the 200 MA. Of the 11 instances, 8 have led to a gap up versus 3 gaps down the next day. The win-loss ratio also favors the long side. But what if we reverse back down and close below the 200 MA? Now we see 7 instances, only 2 of them were followed by a gap up. In this case, the gaps down were significantly larger. So traders may want to keep an eye on where SPY closes relative to its 200-day moving average. Thanks for listening, and rest easy.